Good afternoon and welcome to our latest Between the Lines live event. My name is Vanessa Rader, I'm the Head of Research at Ray White, and today I'm joined with a panel to talk about the Green and Gold Decade for South East Queensland. So welcome to Tony Williams. Tony is the Director of Ray White Special Projects here in Queensland, and we've got Michael McCullagh, who is the Partner and Managing Director of Ray White Commercial Queensland.
Thanks,
Vanessa. Guys.
Good to be here.
Yeah, so it's a really exciting time for South East Queensland, a lot going on, and as we talk about that 10-year runway to the Olympics, just a super exciting time. But before we really delve into that and talk about some of the infrastructure projects that are happening, I thought now would be a great time to kind of talk about where the market's at the moment. A lot of changes in the economy, we've seen interest rate movements, but Queensland has really benefited from the interstate migration, which is continuing this year, like we've seen the numbers still continue. And also, it's just, interesting time. So let's start with the residential kind of development market, which is where you sit, Tony. So how's that going? You work in that kind of large englobo land area? Yeah, what are you seeing?
That space has been really active for the last couple of years. So we've seen a lot of activity transactionally, a lot of clambering to find sites that have got scale, that provide longevity for a developer to get into the market and provide, stock to development for the next few years. So there's been a pretty strong run for the last couple of years. So I think probably there's a recognition today that the market has somewhat caught its breath over the last handful of months. So a lot of the growth that we've had price-wise has seemed to have stabilised. So we had 2 years where the market just kept growing. It's now sort of stabilised, revenues seem to have stabilised. Sales rates are probably a little softer than what they were, but there's also a thought process that a lot of stock, a lot of buyers were brought forward through those real feeding frenzy years of 2021. So we're sort of going through a normalising process at the moment, but still very strong.
But how about the development side of things? Is there still a lot of demand for development sites? Is there much available?
Yeah, there is. There's huge demand. There's not much supply out there. I think if you looked across SEQ and counted up the number of blocks that are available through zoned land or controlled land, it looks like there's a lot there, but it's not like that can be brought online quickly. It's all sequentially developed. So there's not a lot of opportunity that is provided for developers coming into the market. A lot of the zone land, a lot of the land in the emerging areas is already spoken for. So developers are very good at getting in as early as they can, controlling the stock and then releasing it sequentially. So it's there's not a lot of supply out there. There's a lot of conversations around that at the moment, trying to release more land. Yeah. Reality is, even if they release more land or rezone it today, there's a tail of about 10 years to actually practically deliver that to the market with your infrastructure, your sewer, your water, your roads. So even though if they went out and developed or released a whole heap of land, it's still a long time before that gets to the market.
Yeah, for sure. And those buyers that are in the market, are they mostly local? Are you getting people from further afield?
Both. We've got, the local market and the local development groups are here. That's what they do all day, every day. We've had a lot more activity from interstate groups, Sydney, Melbourne, particularly Melbourne. And there's a very good synergy between Melbourne and Brisbane and South East Queensland. Now, some of those groups have been here for 10 years, 5 years, and have been actively looking for a while. It's just that they've been more aggressive in their behaviour of securing assets, and a recognition that I think over the last couple of years that we were underpriced, undervalued. And I think there's also groups looking to hedge their bets in terms of a Melbourne market exposure and a second market in SEQ, which probably provides a little more growth in the long term. So to sort of set up, two camps. Sydney have always been active. There's great developers from Sydney who've been up here, developing and looking for opportunities. It's probably the Melbourne groups that have led the way, to be fair.
So some of the issues that a lot of the developers are facing are issues of construction costs and also of financing. So those that are looking or purchasing at the moment, is there any kind of issues with financing with the interest rates kind of going up? Is it still bank lending? We've seen a lot of alternative lenders in the market. Are you seeing that? Yeah,
we're seeing, and there's always the traditional bank lending. We've seen a lot of that market share absorbed through private lending on 1, 2, 3 year terms, which is generally, I don't want to say easier to get, but certainly more available, with a lot more competitors in the market from a private financing point of view than what we've seen previously. They're aggressively positioning their money in the market. It's probably, like I said, shorter term. To get in and out of the market. Developers are very good at getting themselves, I understand at the consumer end, where the mums and dads are buying it, there's a lot of headspace around increase in interest rates. Developers will factor it in, but it's a cost of doing business. So they won't stop them buying. It's just probably a mechanism on how much they can pay and their long-term outlook on something. So it's been a very, very topical point for the last few months, but not so much for the developers. They're pretty well organised.
So for some of that end product though, construction costs obviously a big issue for those that are the home builders or the builders in the marketplace building those end products. Can you see any way in the future for where we're going with that?
Well, it's a really interesting point because we haven't seen construction costs, which have gone up to 40% up. What typically cost you to develop a block of land 100 grand maybe 12 months ago is now like 140 grand on average. Okay. So there's a significant uplift. What we've found is that the competition to secure the sites hasn't reflected that per lot gap yet. Will it or won't it? I don't know. That's what the market will determine in the next 12 or 18 months, but there's definitely a significant headspace around increase in cost and delivery timeframes. So it's a lot harder, a lot more expensive to get stock out of the ground now. It's probably timely that the market has slowed a little bit, but how those costs, I've never seen it drop back significantly. So I reckon that's here to stay. We're at a new level and it's just a new cost of doing business.
And in terms of location, like you work right across Queensland, we've seen a lot of people move into those kind of coastal areas, north and south of Brisbane. The CB or the metropolitan area has certainly grown. Any kind of tips or areas that you've seen more activity, less activity, where you?
The activity is driven by availability in a lot of ways. Everyone wants to go coastal. So Sunshine Coast, Gold Coast, and you've seen what's happened with the pricing in Sunshine Coast and Gold Coast is out of control because there's no supply. There's no ability to release more land in those areas. So most of the activity is pushed west. So we've done a lot of business out in that western and southwestern corridor through Ipswich and Logan, where there is supply of land. But if you go Sunshine Coast, Gold Coast, there's just no opportunity.
Yeah.
So, there's no new releases of land that are supposed to be coming out. There's a little bit at Moreton, in Caboolture, west, that sort of area. Lend Lease's project in just west of Caboolture. So they've got some good land coming out there, but nothing Sunshine Coast, Gold Coast. So if you've got estates there, you're in a nirvana. You're really in the supply nirvana. But there's no more opportunity that we're seeing. If anyone knows of something, it'd be brilliant to get hold of.
Yeah, that's really great, Tony. So, Michael, in terms of the commercial market, you guys have had quite some success recently with some auctions and things, and you've seen a lot of that income-producing assets still really highly in demand despite the changes in interest rates.
Yeah, that's right. And I think that the commercial markets. There's probably in different sectors and in terms of different price points and client bases as well. So where we've seen a lot of activity and really good depth of demand is in that private client, probably sub $8 or $10 million investment into Brisbane and South East Queensland, but predominantly in Brisbane. If you have a look at sort of maybe the larger scale of commercial investments, and a lot of the listed funds and A-REITs are probably moving to net sellers more than net buyers, but certainly that private client space has been in very high demand.
Any specific kind of asset class that you can focus on? If it's income producing, does it really matter?
Yeah.
Or
look, the buyers recently those that have been active are certainly a lot more discerning than what they might have been sort of at the beginning of this year, certainly at the end of last year and through 2021. And they are taking more of a approach in terms of doing their due diligence around tenant covenants and want to make sure there's security around income. Whereas some investors might have been guilty of buying income over the last couple of years. What's sort of been driving that is the ongoing demand. We sort of had a little snapshot of 10 of our most recent on-market campaigns in Brisbane, and they were a range of different assets from fast food to showroom to a number of different asset types. And on average, there's still 150 inquiries, 8 or 9 bids or offers. We saw one which was sub 4% yield, which when you factor in the cost of debt, you kind of go, well, that doesn't make a great deal of sense, on a pure investment perspective. But what people are buying into in Queensland is that underlying land value, probably factoring in more capital growth than maybe what they would have in the past, and those opportunities which have medium-term upside, whether that's through rent reversion opportunities, development upside, particularly the development upside. It has some holding income, prepared to take somewhat of a smaller return if there's some
more of a
upside
long-term view.
Long-term view.
Yeah,
That's
long-term
right.
view.
Yeah.
So You mentioned kind of showroom assets, and in the industrial market has probably been the biggest winner across the country over the last couple of years. We've seen vacancy everywhere, super low. There's not an awful lot of that kind of new stock being built or much land supply as well. So what are you seeing in terms of how's that impacting your local industrial market? How about rents, investment?
Yeah, absolutely. The industrial asset class has been increasingly popular for a number of years now. And if you look at the different major industrial areas across Brisbane, Trade Coast being one of those, you're looking at sub 1% vacancy rates. So the competition between tenants is very fierce. That's naturally having an uplift in rents. And the net effective rents as well. So incentives in some of those cases are non-existent.
Yeah, definitely. So really the question is, where is that next lot of industrial land coming from? And you've seen some buyers kind of speculating in kind of areas for future industrial.
And it's a similar conversation, just sort of, it's about pipeline security. And a lot of the areas that traditionally provide industrial land in Brisbane are getting pressured. The prices are increasing. They're almost sort of rejuvenation areas where people are coming in and changing the ultimate end use for it, which puts pressure on A, the pricing, and B, for tenants to be able to get in reasonably. So we're seeing a lot of the emerging areas producing broad acre land development that provides a pipeline to major industrial development groups that think, great, we can take a 20, 30-year approach based on rolling out these projects. And they're happy to do that. They're happy to position themselves for de-risked land. Industrials, you've got to have it in the right area with obvious access to main roads and those sorts of items to make them work better. But they're getting a lot of the large deals at the moment positioned strategically for pipeline control.
Well, yeah.
I was just going to add to that, and buyers are looking for some of those infill opportunities within the Brisbane inner city and in some of those industrial areas.
Yeah, which I think leads us into the whole discussion about where South East Queensland's going over the next 10 years, particularly in this lead up to the Olympics, the massive investment into infrastructure. We know that it's been quoted for over $5 billion for 10 years. Is probably, with numbers coming out in the next few days, I think it is, that we probably see that number quite a lot more. But there's some massive projects that are going on which are definitely going to support that infill development that you mentioned, Michael. There's availability of land, and I think there's industrial stock that's available to be developed, or there's land that could be repurposed to meet some of those needs, albeit it's just going to be a bit different to what more traditional industrial we've seen in the past. But speaking of these industrial infrastructure projects, what are the ones that you're most excited about? They're like, we've talked about these infill developments, things that are happening in the city. Michael, I might go to you first.
Yeah.
What's exciting for you in terms of these projects?
In terms of the infrastructure projects?
Yeah, infrastructure projects.
If I've just focused on Brisbane, obviously we're talking about South East Queensland, but Brisbane predominantly. If you look at any point of the compass, there seems to be an exciting project that's happening in and around there. Obviously, one of the biggest ones from a transport infrastructure is the Cross River Rail. And if you couple that into the Olympics over the next 10 years and the reinvestment into the Gabba and that Woolen Gabba precinct, the Brisbane City Council just released their Productive Cities Industrial Strategy. So that area around Woolen Gabba, which has been a low impact industry market, has been earmarked as an urban enterprise area where they want to sort of see continued growth. So that following that transport corridor for the Cross River Rail is a big one.
Well, I think what's really great with the lead up to the Olympics is that the government's been so focused on the legacy part. So we want to make sure that those projects that are coming out of the ground are here for the local population and for the growing population to enjoy years after the Olympics, and for it to be vibrant areas, those areas that not only have that good transport into them, but that infill opportunity where there's mixed use, where there's a variety of different entertainment, housing, live, work, play sort of options.
Absolutely, yeah.
Particularly, like you mentioned, that's that whole south of the river area, which really has an opportunity to do something pretty exciting. And we know that the Olympics is not always it's not a money-making exercise, and there's plenty of examples where those projects, that investment has been made and it hasn't benefited that city in the long run. But it looks like South East Queensland, there's an opportunity there for it to be really grow the population, grow the vibrancy, and something that we can be all really proud of in years past the Olympics.
That's right. It's an opportunity, and there's risk with it as well in terms of having a look at some of the previous games. But if you take and hopefully those that are organising it are sort of learning the positive lessons. And for me, there's sort of three Olympic games that are sort of city shaping events that really define them for decades after the event. If you look at Barcelona and where the money is spent, so obviously there's a lot of investment that goes into these different projects. There's Barcelona had a real focus on transport and reshaping the beach in Barcelona, and that is sort of still having the positive effects now 30 years on. Sydney is obviously a massive one that we all talk about. It's probably the obvious one for Brisbane to be compared to, given it's just short flight away.
Yep.
And you look at that sort of Olympic Park precinct, moving that from a toxic wasteland into I guess what's happening there. The growth of Western Sydney has all been accelerated because of the investment they made into those Olympic Games. And then London, and once again there was a big focus on transport, upgrading rail connectivity, the whole development of East End in terms of that work, play, live, wouldn't have happened without an Olympic Games, and that's the opportunity for something like that with Brisbane.
And the other thing as well is we want that kind of global focus will be on South East Queensland over that period, but we want the tourism to stay. We want tourism to keep on coming back, and Brisbane's often seen as kind of that third wheel to Sydney and Melbourne, and we kind of want more than that. The population is moving here. There's so much opportunity, so I think a lot of these projects are just really going to be shaping for the future ahead for South East Queensland.
Yeah, I think if you look at it from the perspective of the Sunshine Coast, Gold Coast, what's happening out at areas like Bow Desert with the Warralong Dam and a lot of the work that's going on there in terms of upgrading those facilities. I think Australia, generally speaking, with the events that we've had in the past, whether it's Sydney or even the Commonwealth Games that we had on the Gold Coast, is making sure we don't end up with white elephants for facilities. We're good at putting facilities in place that can expand when we need them to and then contract back to a community facility at the end of it. And more broadly, I think just road, rail, everything else that comes around with transportation within South East Queensland, if the investment goes in there, then we're really well positioned for post-Olympics. So everyone gets the legacy of a really good network that's been upgraded for a fairly significant event but provides a long-term benefit for everybody. Which would be great.
Well, which is right, because then that has an impact on all commercial and residential asset classes. You can't really pick one that's going to benefit more than another, because that ease of accessibility and just the sheer number of people that are going to be moving through is going to be beneficial for office, industrial, retail, land. It's every asset class. Your childcare centres, your fast food, everything is going to be have a positive impact.
I think there's a fair pressure on the existing infrastructure that we've got at the moment. And they're sort of predicting in the next 20 years 2 million people to come here, and 800,000 more residences need to cater for those people. So we've got a lot of challenges, and if we can have something like the Olympics that gives a good longevity to strategically work on what we have, enhance it and build for the future, it's a massive win for SEQ, it really is.
Yeah, and just talking about the Gold Coast and Sunshine Coast, those two markets over the last couple of years have had, like you've mentioned, just enormous success. Not only is there residential land development, but also those office markets are fuller than they've probably ever been. Industrial in those areas that have that similarly low vacancy and rental growth. Is there an opportunity there for because there is land, is there an opportunity there for things to be advanced, to really grow those areas? And the projects like the rail, the fast rail, the rapid rail, that's going to really open up the accessibility back into Brisbane and across the entire South East Queensland. Big opportunities in those markets?
I'd hope so. I really, and I think the state government is starting to make steps towards, there's all the discussion about affordability and supply. If you solve supply, you'll solve affordability.
Yeah.
So if we can release more land and give them excuses like infrastructure to use, like a fast rail, that can get people from where they live to where they work faster and more readily, it's got to be a massive win for us. So SEQ is well positioned if they get those projects and infrastructure set, and they can release more land to work in with those infrastructure investments, then it's a massive win for us. So be able to supply more land or more opportunity for people to live here at a more affordable positioning, it's a massive win.
And like you said, the delivery of land takes time. This is something that we need to be thinking about now for the future. If we're already getting the interstate migration numbers that we've been getting, plus the immigration is going to come back, we're going to see, all these overseas migrants coming here. We're going to see so much movement. Population is going to increase. They all need somewhere to live. We know residential vacancy rates are low. The availability of land, it just takes time, and we really need to factor that into this kind of broader plan that we have with the infrastructure to make sure that South East Queensland can be the best that it can be.
Yeah, and I think we've given the world a focus to look at SEQ. Now, if we don't cater for people to be able to come here, it'll be a massive opportunity missed.
Yeah.
Yeah, so everyone's going to be looking at Sunshine Coast on TV when they have their few events on there. But yeah, come and visit. But there'll be a lot of people wanting to come and relocate and move, and we've seen that. We've definitely seen that the last few years. Yeah. And if there isn't the availability, that affordability is out the window as well. It becomes difficult.
Yeah, it'll make it really hard unless they can open up supply and actually cater for the people to come. All the demographics, all the information saying that people are coming here.
Yeah.
We're opening up more eyes to look at the region. We really got to plan to cater for it.
Not to mention the profile that it builds for a city. I'm sure there's a lot of people across the world, although I believe that it's the centre of the universe forever. They're kind of going, where's Brisbane? And it's just up from the Gold Coast, or it's just there's Sydney. And so really just that profile as a world city, and then you couple that with then a lot of the amenity and projects and exciting things that are happening around the city, and it becomes a real destination for people to want to come to.
It feels like it's at critical mass at the moment. Brisbane and South East Queensland, it's had a really good run for a handful of years and done a lot of catch-up work. Hopefully the Olympics in 10 years' time will provide a more steady stream of growth. SEQ has been up and down, has a tendency to go up and down, but hopefully with the Olympics it'll spread it out and make it more even to sort of get to where we need to be. Hopefully we're doing the work now to plan for that. Because traditionally we've been behind the 8 ball.
And that's sort of, I guess, that we're talking about 10 years away from today, and it is the 10-year runway in the lead up. So the good thing is there's plenty of time to plan and to get it right. And it's also what is driving a lot of the investment. If we go back to how's the current market, the local buyers believe and have never been more excited about what's happening in their own home city and region. And likewise, there's a lot of new capital coming out of Sydney and Melbourne, which is now looking first and foremost at Brisbane, which is putting upward pressure on, or I guess more of a micro environment to, in the current market, there's probably a lot of macroeconomic reasons as to why commercial investment should be subdued, yet we've seen pricing in Brisbane hold really steady and the demand still be there, and that's that medium and long-term 5 and 10 year horizon that they believe in.
Yeah, that's definitely right. When you're looking to hold for a long period of time, and like this, all these projects are going on really highlight that's a great thing to be doing. That's why your yields haven't really seen much change despite the cost of finance and funding, and it's certainly an interesting dynamic in the marketplace.
And some really cool areas that'll get totally regenerated. Mike was saying about Woolloongabba and those sorts of areas, North Shore, the EDQ's land there, they've got 40 hectares, they're going to put up circa 16 high-level, 15-level buildings to cater for 10,000, athletes as well as officials. So those sort of projects and the infrastructure that goes in, particularly with a transport system that doesn't work well in that location, it's a massive win for Brisbane, right on the river, a handful of k's out of the city, it changes the landscape of the city. So they're really major projects for SEQ and for Brisbane. Yeah.
And is there any projects that you can see that are kind of further afield that may, see some markets that we probably haven't thought of before, maybe get a bit of a lift?
Well, like we were talking about before, that Bow Desert catchment with Warralong and the upgrades that are going there, using Corralbin, which is an existing facility to house the athletes. And it's not, on the scale of the Olympics, it's not a huge thing, but it's a really big thing for that area. And it's a great thing for them to say, we've got this in our backyard, a major infrastructure spend, drawing attention to those sort of areas. It can only do good. Sunshine Coast, Gold Coast has already got their Athletes Village and everything set up. They'll work in Maroochydore and in getting the Athletes Village on the Sunshine Coast. And that's a really cool position to have an Athletes Village, in the middle of Maroochydore. And to be able to cater for that in a fairly land-constrained area is brilliant. It really is brilliant.
And there are some really exciting projects that are happening across Brisbane. It seems to all be happening at once or all being announced at once, which is sort of buying into that fever of, everyone seems to be talking about Brisbane and now looking at Brisbane. And Tony mentioned North Shore at Hamilton. There'll be 10,000 athletes that are housed there. Well, that's going to have long ongoing legacy impact. And then you look at some of the other projects across town, across Brisbane, and even sort of right next door to where we are here, the Eagle Street Pier redevelopment by Dexus. It's a $2.1 billion development, and part of that then there's a bridge, pedestrian and cycle bridge across to Kangaroo Point, opening up better connectivity and access across the river on both sides. Swing around to the other side of the CBD and you look around Roma Street. Once again, that's going to benefit or is benefiting from the $5.6 billion Cross River Rail project.
Yep.
And they're doing Brisbane Live on top of that, creating a completely new precinct in that part of the CBD to activate it, which has traditionally been the legal side, the courts, that sort of thing. That'll become an entertainment precinct, and that connectivity from there through Petrie Terrace. There's just these, I guess, core projects which then have great opportunities surrounding those. If you look, as we sort of follow the line out to the north side, we mentioned Wollongabba. Back onto the south side, they've announced the International Broadcast Centre at West End. So that gentrification of an area like West End, which has been going on for some time, but these projects just accelerate that. The Visi site there will be, the epicentre of the world's media will be there in West End, and they're calling South Bank 2.0. Then you go north and you go to sort of Bowen Hills, Albion. There's so many little precincts. That's what I said before, is that if you have a look at Brisbane and you point the compass anywhere, there seems to be an exciting precinct or project which is earmarked to be opened up.
And bringing that back to property is the ability for so much infill then to be activated that hasn't been activated before, and be it these kind of high-tech kind of industrial uses or mixed-use residential, office, retail. There's so much opportunity now for land that probably wasn't really on the drawing board to be developed, or it's just kind of been sitting idle for a little while, which really helps kind of the vacancy situation we've got, industrial and all those different asset classes. But it's just exciting to be able to do something new and vibrant, particularly in such a small, within that kind of city catchment.
Yeah, absolutely. And where those sort of big projects are, there's smaller opportunities for all different types of investors and developers for those infill.
And we've seen people coming from other states coming and converging on those just yet.
I think there are some eyes looking that probably wouldn't have looked before.
Yeah.
There are groups that are coming in big and small to find their niche in the market, to be able to cater for something, whether it's in 2 years or 10 years, but with a more broad view. And infrastructure spend and amenity brings the opportunity for price growth and values to lift. So whether it's perception or reality, we'll find out in 10 or 12 years' time, but at the moment it feels pretty good.
Yeah. Well, I think that probably wraps us up today, but that's a really interesting discussion, talking about where all these infrastructure projects are and how they're going to impact the markets, residential, commercial, all of them. It's going to be certainly an exciting time for South East Queensland, up and down the coast and the broader Brisbane market. So can't wait to see what happens over the next 10 years and beyond that for the city.
Yeah, absolutely. We're really excited about it, and it's a topic of conversation.
And it will be for the next 10 plus years, because then we'll talk about what's happened after it and making sure there's no white elephants hanging around. And I don't think there will be. I think we're on the right track.
I think we're in good hands.
Good hands. But thanks so much for joining us, guys. I really appreciate it.
Thank you.
And that wraps up our Between the Lines live event for today. Just so you know, we've got another one for the last one for the year on the 29th of November, and that's going to be done in our Sydney office, and it's going to be with our HTL team. So Andrew Jolliffe and Rick Wooms will be talking about hotels, pubs, tourism, financing, all those kind of fun things. So make sure you stay tuned for that one there. Thanks so much.